Get all your questions answered. What is a bear market? When the broader market stock like the Dow Jones Industrial is 20% lower from its highs, that's considered a bear market. Is the US stock market bullish or bearish right now? A lot of investors might think this is a buy the dip opportunity, but with the stock being in the middle, I think it's a 50-50 shot. But when you add inflation to the equation, I think the market's going to go down. What is inflation? It means the prices of goods and services are going up, which causes your buying power to go down, which creates an economic recession. What's a recession? A recession is a slowdown in the economy because everybody's budgeting for the higher cost of goods and services caused by inflation. The question is the US in a recession? Some experts say the US is already in a recession. Here's my question for you. Have you held back on buying things because you didn't have the budget or the allowance to be able to buy the way you used to 2 years ago? If the answer is yes, then that's your confirmation. Will a recession cause a stock market crash? Or will a stock market crash put us into a depression? Top 12 causes of a recession: higher interest rates, we've seen that. Manufacturing slowdown, we've seen that. Poor management with supply chains, we've seen that. Or a stock market crash could cause a depression. Welcome to Stock Charts Trading. Every week we give you a trading analysis of market indicators showing you when and how to buy the stocks, options, swing trades. If you're already a member, thank you. If not, go to Stock Charts Trading, click on Indicator Alerts. I wanted to go over those questions and answers to prepare you in the thought process of what happened in the past in history so that we'll be able to look back, see what indicators said about the stock charts so that we could apply them to today's market. Past results is a great educator for the future market. I hope today's video causes you to think differently about how you trade in these upcoming months. Great recession and how to prepare for it. We had 3 major recessions in the last 20 years. The first one was the internet bubble, and you can see it lasted a long time and just melted lower. It was not as big as a pullback as the 2007 financial crash. Then we had the COVID crash, which was much steeper in nature and didn't last as long as the 2-year financial crisis. So when looking at the current market condition, this is not a good comparison for our current situation, nor is the 2000 internet bubble. The one that fits best is the 2007 financial crisis. Zooming in, using the implied volatility indicator of Stock Charts Trading, you can see that implied volatility started to raise up, making higher lows before implied volatility skyrocketed higher, which has not happened here yet, but just wait. Another thing we see is 4 topping patterns in implied volatility going lower before implied volatility shot up. Zooming in, we can see that currently we have 4 topping patterns also, sloping downward, making a wedge formation. Next, from each of these highs down to 20%, which creates a bear market, it took on average 120 days. From the highs down to support, 117 days, almost 19%. Next, notice how price action missed the resistance, not coming all the way up into it, and at that point, implied volatility started to take off as the market started to really sell off. So when we have a high, lower high, and the market misses hitting that resistance line right here, and even right here before selling off, I think it's a good indication that we're about to see implied volatility rocket up as prices go lower. Another thing to notice about implied volatility is before the market crashed, implied volatility was at 0.22. And the thing to consider is, where did the market go to? It sold off 50% down to support. So if the current stock market sold off in the same fashion, that'd give you a target of $200. Now here's where you have to start considering things. If you're in the market right now holding on to long-term stocks, I want to challenge you to sell your positions and start a new trading strategy. If you notice with our implied volatility, the top portion is green, meaning that's when you buy. If you'd sell your positions now, wait for the market to sell off, and use the implied volatility indicator to buy back in, you would get phenomenal entry point with some big increases in almost 100%. Trading less, but with precision based on history. What can you make money at in a bear market? That's right, commodities. To zoom in and see exactly where Dow Jones reversed would probably be this head and shoulders pattern that happened a couple months before 2008. To get a better understanding of the Dow Jones having a double top pattern starting around July 2007 before leading to a big sell-off, if you notice, corn prices were selling off, just as the stock market was making a topping pattern. And while the stock market sold off, commodities went up 120%. So go from the bottom, price goes up, small pullback, price goes up, big pullback. Watch our Elliott Wave playlist to get more on this. Corn is making the same pattern. Off of the bottom, rallied up, small pullback, broke out, bigger pullback, right at the support level. Also making horizontal support. The high likelihood is that this will bounce from here and duplicate higher, just as it's done done in the past. How much higher? Make a range box, duplicate that up. Price action could definitely go from $25 upward to $50, making you 100% profit. Now let's look at silver. Remember what we said? July 7th was the topping power for the Dow Jones and corn. Back here's your low. Silver rallied up, made a consolidation, and off of support just before August, started its rally higher, profiting almost 90%. So looking at silver right now, their support rallied up, made a big bullish flag pullback, retracement right into support. You have other highs showing a supporting confirmation right at $17. Looking for silver to break out and come back to these old highs around $45, maybe higher. That would give you a 200% profit, hedging you against any downward pressure of the stock market. Don't forget about inflation being at 9%. You have to make at least 9% a year just to break even. So you need things like commodities to be able to hedge you from that 9%, making more than 9%. And that's where the challenge is for you long-term traders. Selling out of the losing positions for the last couple of months and protecting yourself by buying commodities, waiting for implied volatility to be at the high so you'd be ready to buy. If you're holding on to stocks that are losing money, you won't have the money to buy when implied volatility is high, showing you the perfect entry point. Why implied volatility? In the last 10 years, implied volatility showed you only one place to buy oil, yielding you a profit of 1,300% in just 2 years. Palladium near the lows, giving you over 300% profit in 3 years. Every time implied volatility is green, that means it's time to buy, yielding you phenomenal results. Every time it's red, watch out below. And because we know the market right now is so volatile, selling off, you should be using this indicator to swing trade, selling it lower every time. And this is how easy it is. When a stock is going up, coming into resistance, you can create a matching channel on implied volatility, which will look like a divergence. This will be going up while this will be going down. Price action's going up while implied volatility is going down. Both areas are highlighted red to confirm the direction of the next move. As you can see, these both sold off lower, red for sell. There's 2 entry points you'll experience on implied volatility. The first is very common, a support level on the lower channel as implied volatility bounces. Price action will top, selling off as implied volatility goes higher into the green zone, and price action will match. Another way is after identifying the support bounce on implied volatility and seeing that it's in the mid zone, which is where we don't take trades because there's too much indecision that price could go higher or lower. You wait and watch for the retest on the channel, giving you the perfect place in both red zones to short the market. As price action sells off, implied volatility raises up, giving your options more value. All right, now let's go over some trade setups. AAL, 90-day 4-hour. We have the bear flag indicator, making this nice little formation right against the trend indicator. We're in the red zone up against resistance, and we see that the implied volatility is also in the red zone. You can see the implied volatility started to go lower in the channel, broke out, and now is retesting that as a support level. Implied volatility will raise up as price action sells lower, at least into this $12 range. Why $12? At a minimum, price action would make a double bottom before going up. But with a bear market sell-off, price action would break through and go lower. UNH, 90-day, 4-hour, trend indicators going lower. We have a MACD divergence, which is right across the resistance of these candlesticks. Nice gap up into the resistance as the implied volatility goes lower. When implied volatility is low, watch out below, meaning over the next 2 months, it should go down to $450. Last time it hit these highs was $410, and it took all the way to $615 to hit the lows. Apple, we have 2 bear flag formations, creating a lot of resistance. Old support makes new resistance with the trend indicator going lower, along with implied volatility breaking out, bouncing off of the support. Both price and implied volatility are in the red zones, meaning this would be a great trade to short back into the support of $130 or to this lower channel of $115. DIX, trend indicator pointing lower, bear flag formation, along with the MACD divergence at resistance, with implied volatility breaking out, bouncing off of the support level. Indicators showing DIX will sell off to about $75, then down to $60, making a double bottom. ITB, bear flag formation, right up into diagonal resistance, implied volatility going lower. Both are in the red zone. Implied volatility at support, price action against resistance. Definitely looking for a sell-off back down to this $50 level for a time frame. Just take from the bottom to your highs. This is about 25 days. And from your bottom up to the highs, this is about 25 days also. So you definitely want to think about an August date. So when you're looking at your option chain, go to August 19th or later. If you're wanting to compare option values to ITB, look at other stocks like Lanier. They also have bear flag formations with implied volatility breaking out and bouncing off the old resistance, making new support. Both in the red zones, putting this this target at about $65 as implied volatility comes up, giving your options more value. Last trade we're going to be looking at, SYY. You can see that the bear flags like this as a resistance indicator. Price action's right against that right now with a little gap up. MACD divergence as an addition to this major double topping horizontal pattern. We can see that implied volatilities broke out and selling off, coming back down, bouncing off of that new support level, which will add value to your options as your puts sell back off into support. Depending on how aggressive you are, you could take this long-term support level of around $75 and skim out some of your profits at around this $79. There's so many different indicators on the market, but what you need is something that is consistently showing you the same exact trade setup. So you don't have to think about the rules. Either it's red on red or it's green on green. Either it's bouncing off support or it's bouncing off resistance. The easier you can keep your strategy and consistently do it over and over will make you more profitable in the long term. With stock charts trading, we do video education that we release on YouTube, and we categorize everything for you under playlist. All of these videos are delayed, so they'll give you the ability to see what price action did after we determine the trade setup. If you're looking for trading ideas with trading analysis on when to take the trade, when to get out of the trade, then go to Stock Charts Trading Indicator Alerts. There you'll get this video live weekly every Friday so you can examine it over the weekend so that you'll be able to have the perfect trades come Monday morning. From these videos, we examine different indicators to give you the knowledge and experience you need so that you can trade them for yourself. You can use this on any brokerage firm around the world. You don't need the indicators to be able to use this service. As always, I wish you the best luck in trading.